Candlestick, it visually represents what's going on in the market, and it has to be defined by the following: open price, closing, low, high, and the upper and lower shadow and the real body. Let's define each one of them. If the closing price is above the open price, which means the candlestick is bullish, which means that the market is rising in this period of time. This period of time, it could be anything between 1 hour, 5 hours, 10 hours, 1 day. And bullish candlestick are always displayed as white candlestick, although you could select any color you want, but always make sure the colors here are in contrast. So the most important is the open and the closing price. If the closing price is below the open price, which means the market is falling, in this way is bearish, and they're always displayed as black candlestick, but this is not a rule depending on the color. So we have the real body, as you could see it here, okay, which is the filled part of the candlestick, and we have the thin line poking above and below the body are called shadow. The top of the upper shadow is a high, and the one at the bottom is a low, as you could see here in this example. Okay, and candlesticks, they have different body size. So in this example, we could see here long bodies refer to strong buying or selling pressure. If there is a candlestick in which the close is above the open with a long body, this indicates that the buyer are stronger and they are taking control of the market during this period of time. So this is a short body, this is a long body. So I will repeat: if it's a closing is above the opening, therefore it is a rising market, and which means the buyer are in control of the market. Okay, as they are stronger and they're taking control of the market. If the bearish candlestick in which the open is above the closing, so it is a falling market, and the selling are in control during this chosen time frame, as you would see here. And if it is a small or buying or selling candlestick, which means there is a little buying as a small bodies, there is a little buying or selling in this example. Okay, now with respect to the shadow, so if you consider the upper and lower shadow, give us an important information about the trading session. Upper shadow signifies the session is high, lower shadow signifies the session is low. Candlestick with long shadow shows that trading action occurred well past the open and closing. So even if it's closed here, even if it's closed here, it carries on. Okay, so let's if it is the shadow is short, if the candlestick has a short shadow, indicates that most of the trading action was confined near the open and close. If a candlestick has a long upper shadow and short lower shadow, as you would see here, this means that the buyer flexed their muscles and they were pushing to buy. It must look like a white body here as a candlestick, but for one reason, the sellers, they came in right at the end and drove the price back. But the next one, it's gonna be a white one. If a Japanese candlestick has a longer lower shadow, as you would see here, and short upper one, this means the seller flexed their washboard and they were trying to get the price down. But in this case, as a buyer, right at the end, they jumped in and they're trying to balance the system. They jumped in, they're trying to balance the system. But definitely the one after this one is gonna be a falling candlestick trend, and the one here is gonna be rising or making money at market.